we look at growth. If I find growth in a 300 crore market cap company,
you'll go and buy that.
I'd like to buy that company.
Okay.
If I find growth in a 6,000 crore market cap company, I'll buy that. If I find growth in a 200,000 market cap company, I'll go and buy that. This method has worked for the last 20 years for me while I was winning, and for the first 9 years while I was losing and I was not following this. So I can discuss this with you later. So another thing, the problem with such quantitative analysis of data is there is always that outlier which you would never realize. And let me give you another thing to it. 95% of people die by sleeping on the bed. Does it mean you shouldn't go to bed at night? So when you take too much of data and analyze it, the outcome might appear great. Oh, 95% people die while sleeping on bed. Should I go to sleep tonight? And why I'm saying this is, out of those 2,000 companies, out of those 1,800 companies, 4 would become multi-baggers.
Sure.
But the averages would hide them through. So don't look at averages, because we don't bet on average. Unless you want to buy a Russell 2000, for example. That I want to buy 2,000 companies. I'm not bothered about that isolated HDFC Bank Limited. We don't own it, so I can talk about it. Then you can look at those quantitative analysis. Otherwise, I think it's just too much effort without gaining anything in return.
You saying that you going out looking for growth in this scenario as well, Where is it that you're finding growth currently? A lot of people will say, I see it in multiple spaces, but I know you don't hunt like that. I mean, you're not going out looking at 20 ideas which are showing growth. Where is it that you are finding the kind of growth that you are watching out for, which will help you generate alpha?
See, the earlier theory was you should buy a company which has a sector tailwind.
Yes.
So the sector grows at 15, my company will grow at 25 because it's going to elbow out 2-3 people.
Right.
That theory is gone for a toss. And I will tell you from the NBFC space, from the aviation space, from the jewelry retailing space. Now the growth isn't coming because the sector is growing. Growth is coming because your competitors are going bankrupt. So how does it matter to you whether the sector grows or my competition goes bankrupt? I still have that extra market space to get into. So if we use that analysis right now, for me, you remember a cricketer called Ravi Shastri? He used to play just 2 strokes. One was the chapati and the other was the lofted drive. And then in 1985, he was declared the champion of champions. He couldn't play the square cut, he couldn't hook, he couldn't pull, he couldn't play the sweep, the reverse sweep, nothing. So for me to make money in this market, all I want is 1 good company. 2, 3 is great, 4 makes my life, right? Why I'm giving this to you is because normally people look for buying 10, 15, 20, 30 companies, but if you buy 30 companies, you're going to do only as good as the Nifty. So if you, and if there are 30 companies doing well in India, growing at 30-35%, you're probably nearing an economic top, which was the case in 2017, 2018. Right now with 4.5% GDP growth, I don't know whether it's even 4.5 or 3.5. Who's going to vouch for that? You cannot have 4,500 companies doing well. You cannot have 450 companies doing well. You would only have 4, 5, 6, 7, 10 companies doing well. Globally, look at the situation. Facebook, Amazon, Apple, Netflix, Google. That's the American side to it. Baidu, Alibaba, Tencent. These 7 companies reflect 8% of global market cap. So if you want to say that the entire globe has gone crazy, I'm one of them. 8 companies, how can they represent 8% of global market cap? No, people haven't gone crazy. The system has changed from small is beautiful to big is great. Because the more globalization you have, the more opening up the economy you have, the inefficient players would find it very difficult to survive. And that is what has happened. You show me a small cap growing at 30% top line, 25% ROE. I don't need the dividend. They can keep it for themselves. With a sustainable, predictable growth. I don't want a company that's trying to do what China is doing because there's a pollution problem in China. I don't want a company that is growing, that is trying to make graphite. Because I know the ultimate outcome of those things. You show me a company, I'm willing to put 10% of my funds portfolio and my portfolio into that company as long as I think that the growth is predictable. I'll buy it at 40p. And I can tell you that even at a 40p, if there is a 25% predictable growth, you would make money over the next 10 years.